the lessons I learned is you got to be 100% committed.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Keith Nelson. Keith, how are you doing today?
Hey, Todd. Thanks for having me. Doing pretty well.
Oh, awesome. Absolutely. Well, thanks for joining us. Keith started in commercial real estate sales, which provided him the foundation of knowledge to build a successful real estate investment company. Keith built Dual City Investments on the foundation of fidelity and integrity. He's always looking for areas of improvement and a desire to do things differently, which we'll dive into. Keith architected a cohesive ecosystem of real estate divisions that provide tools and services to make transactions more efficient, which allows Dual City Investments to transact where others cannot. So Keith, with that said, let's dive in. Let's dive into Dual City, to your company, to what you guys are doing and how you're doing things different.
Yeah, sure. Dual City, we started in 2014 with the belief that real estate investment syndication should be available to everybody, not just accredited investors and the top 1%. Yep. Me and the other founding partner of Dual City were both pretty much civil servants for most of our professional careers. We were both in federal law enforcement. And that's how it started. It started as a group of, friends, partners, whatever, just pooling our money and started buying assets in the Southeast. So I moved down to Greenville, South Carolina. My partner was still in New York. And then that kind of evolved into our syndication company where he would bring in capital from New York, from friends and family, and I'd find the assets down here. So we always wanted to bring what was available to the wealthy to our network of people. And from there, we found out we did things the right way and always put our partners and investors, in the forefront. And it just kind of naturally turned into a successful real estate company. So that's kind of the short of it.
What kind of assets are you focusing on?
So I love and I hate when people ask me that question. So I actually just did a video and a blog on this particular conversation about having a niche and a specialization. We started in multifamily in the Southeast, and then several years into our business, we realized that all these big private equity firms and REITs started to flood the market, compress cap rates, compress, yield on assets. So we had, we pivoted. We went to self-storage. Before that was the next hot topic, and, industrial. So our niche is really more of a price point in the market, more so than an asset class or even a geographical area. So we go from, $2 to $10 million properties. We feel like that's a price point above the individual, smaller mom and pop investors, yep, but well below, the institutional guys. So that's really our only niche. But in our first fund that we just closed down, we had everything from office to multifamily to a boutique hotel. We examine the opportunity and we learn everything we can about it, and we go by a deal by deal basis, not these are our tracks and we have to stay in these lines. So and I think that's boded well, us being flexible and being able to pivot has helped us immensely.
Yeah, and everybody talks about a niche, but your niche is, you do have a niche. It's $2 to $10 million buildings.
Yeah.
Right. And I'm sure you're looking for specific things within that too. My guess is you're not going to just every single $2 to $10 million building is not passing your sniff test.
Oh, for sure. I mean, yeah, we're doing our due diligence on every deal. But most people ask me what my niche is. They're talking about either area or
Yeah.
asset class, and I know that question always kind of throws me off because I'm like, well, what's your niche? Well, commercial real estate. Yeah, but what's your niche in commercial real estate? Well, I
Yeah.
really don't have. But yeah, to your point, you're 100% correct. Yeah, that is our niche, and maybe I should start off with that when someone asks me. But
Are
yeah,
you are you going after a specific property type? Like, are you looking for that mom and pop property? Are you looking for a value add property? Or are you looking for cash flow properties, appreciation, or is there any like common denominator there?
Um, well, it'd be nice to get cash flowing assets. In this market, it's a little tough.
Yeah.
With interest rates going up and cap rates, staying low. That's been a little tougher. So we've had to broaden that a little bit. But if we find if there's an asset that we can add value to and can lead towards cash flow, we'd absolutely entertain that. And like I said, our main focus, yes, was cash flowing assets, but then we'd widen our viewpoint to adapt to the market and continue to do deals and do deals conservatively.
What made you go from federal, you said federal law enforcement, what made you transition federal law enforcement into being an entrepreneur, owning this commercial real estate investment company? Take us through that maybe that mindset shift that you went through, and why that change?
Yeah, actually, I was in federal law enforcement. I actually authored a book that kind of highlights why I made that shift. The book is called Missed Ops, but there's a chapter in there, and it's titled Institutionalization. And coming from a middle class family on Long Island, New York, it was just ingrained into me and my sister that you need to go to college, get a good job, get health insurance,
Yeah.
and that's it. I have
Yeah.
2.5 kids, the whole nine. So that's what we did. But my other partner, who was retired from the FBI, we were in a task force together. I was DEA. He was FBI. We were in a task force, and we're sitting in a car in a affluent area of New York, and we're sitting there one day, and I think we're on surveillance for, I don't even know, like 20 hours straight. And we're just looking around at these houses, and we're like, man, what went wrong when we're sitting in a car, eating, 2-day-old pizza, and these people are, have Bentleys and these giant mansions. And so that's kind of where the concept of the book came from. We kind of reversed into it of, yeah, my parents told me the same thing. Like, this is what I had to do. This was what success looked like in America. And, maybe that was the case in the, I don't know, 40s, 50s, 60s. But to break that mold, you have to do something different. So, self-examination, is this where I want to be in, 20 years, 25 years, retire in this position? No. So for me, I left, I only spent, I think 4 years in that division. I left New York, moved to South Carolina, and I always had the entrepreneurial spirit, but it wasn't until I fully committed to that, that diving into real estate and learning everything I could about it, just following that path. But so, yeah, that was the mind shift.
Yeah, I mean that's obviously most people, the vast majority of people. That's the same thing. I mean, you're just kind of told that's just. It's not even that you're told; it's just you should expect it. Like you don't
Yeah.
know that there's even another. You're handed when you're a junior in high school or a senior in high school, you're given this like personality type test, and you're told that these are the careers you should take, and this is
Mhm.
what you get. Did you take those? I know I
Yeah,
took
I
those.
did.
Yeah, and you're
Yeah.
told like this is what you should do for the rest of your life, and you go, okay. Well, there was never entrepreneur or real estate investor. That was not one option. So we're just kind of just told like, this is what you're supposed to do the rest of your life.
Yeah, for sure. And the whole if you ever read Rich Dad Poor Dad, but that whole mindset,
Yeah.
that's we're not taught that.
No,
We're taught
not at
to,
all.
stay in the line, stay in the box, and just live your life, and this is the way it's supposed to be. But
Mhm.
it was the best decision I ever made. So I'm happy I was able to make that shift. And I'd love to talk to people about jumping careers and all that stuff, later
Yeah.
in life. And I could give them my blueprint. It worked for me, but the lessons I learned is you got to be 100% committed, because
Mm.
there was things that I tried to do part-time, do something on the side or at night on the weekends, try to build something. But it wasn't until, I burned the boats behind me type attitude, and just, there was no other option but to move forward. And that's what really succeeded and really took off.
Yeah, that's definitely something to lean into, right? I mean, you can be partially committed. There's a lot of people that want to, just kind of do a business hack, or they talk about grinding it out, and that's okay, I guess. But if you really want to jump into being an entrepreneur, quite frankly, sometimes you just have to do it. And like you said,
Yeah.
you have to burn the boats behind you.
Yeah.
So now, okay, so you talked about how so your syndications, you guys are targeting both accredited and non-accredited investors. Um, you like the idea of bringing in non-accredited investors and providing this real estate opportunity for everyone, which I think is amazing, right? I love it. I love doing the same thing, and I think that's awesome because the rich get richer, and unless you're providing them those opportunities, there a lot of your investor database. I mean, are you specifically targeting kind of the law enforcement, or is it just more of a friends and family network, or how's that looking?
Um, yeah, friends and family is
Yeah,
is what has grown to. And we're still really doing it that way. We just started some sort of marketing push, but we've never done that before. It's always just kind of word of mouth. And I know a lot of gurus and teachers, they always calculate like, hey, what does the deal look like? You have to cover, your expenses, your profit. You got to protect that first, and then what's left for an investor, and see if it works out that way. I was fortunate enough not to have to do that, because I started in commercial real estate sales, and we built the investor company the opposite of what everyone pretty much told us. And we always put the investor first. Like, what can we deliver to the investor,
yeah,
right?
yeah.
And
Does
then
this
what's
deal
left.
work for the investor? If it works for them, it'll probably work for us. Is that's your
Well,
mentality?
my mentality was, if it works for them, that's great. If we make zero money on it, okay. But I got a piece of that commission transacting that deal,
Sure.
right? So I was like, okay, let's see. And but then what happened? We became proficient at running those properties, and that back end equity that we carved out for ourselves started to compile and really add up. So we always put them first, and I think we still do. So I have a commercial division now, and we have a lending division. And you know what? We don't have a very high overhead. We share a lot of the same employees with my investment company and those other divisions. And it has enabled us not to have to do transactions. And I see so many times of groups and investors having to do deals to keep the lights on.
Yep.
Right. So,
Yep.
they can't pay their employees unless they're getting acquisition fees to keep their company moving. So what happens? They start to overpay, and one thing, one thing after the other, and all of a sudden, their investors aren't getting a return, and they're looking to go elsewhere. So
Yeah.
we had the philosophy of taking care of them first, and everything will kind of work out. And it's been a longer road than most. We, not an overnight success by any means, but we feel like doing things, that way is beneficial for everyone in the long run.
Yeah, I couldn't agree more. I mean, sometimes you see these, not sometimes. So, of course, with social media, you're always seeing these companies that all of a sudden seem like they all explode overnight. But running a company like you're explaining, and of course, I don't know the inner workings of your company, but by the way you're explaining, you guys are taking a very, very calculated approach, very cautious approach, and you're going to be around for the long term, and your investors are going to be making money for the long term versus maybe making a lot of money right now. But when the market changes and the tides go out, some people are going to be, we're going to see they're swimming without any shorts on.
Yeah, exactly. Yeah, someone, I heard a quote the other day. It was really, really great. Is, riding a wave is not equal to knowing how to swim.
Mm,
So,
yeah.
yeah, I agree with you 100%. Yeah, when the tide, goes back out, who's going to be left? And that's kind of the mindset that we have, moving forward. So,
Yeah.
we see the market. We live in this every day, and I think the market's hyperinflated right now, and we're due for a correction.
Are you
But
guys buying right now? With that said,
we are, and I know that sounds ridiculous, but we closed up our other fund that I mentioned, and we launched one in January. Um, but we are buying, but we're buying because it's not a closed fund. So we don't have a finite period of time to raise capital and go out. It's evergreen. So we've raised capital. We've been buying. We know the market. We know it's high, and we know it's going to shift. But as long as we can keep purchasing smart assets through those cycles, we feel like this is going to be the last fund that we ever do, and it's going to be something big.
nice. I love it. Yeah, and that I think that's the key is, as you said there, that the market, we don't know. I mean, look, it could be next month. All of a sudden, the bottom falls out. It could be next year. It could be 10 years from now. But what both you and I know, and every listener knows, is that eventually the market's going to change. Eventually, things aren't going to continue to go up. It always happens. But buying smart assets and being smart about your acquisitions and your operations is going to keep the lights on and keep you running. And those investments will maybe not be home runs, but if you're buying smart, conservative, and just being prudent, they should be at least a base hit.
You just outlined my business plan. Yeah.
Oh,
100%. I'll take singles all day long.
yeah, I agree. So, you mentioned when I introduced you, you mentioned you architected a cohesive ecosystem of real estate divisions that provide tools and services that make transactions more efficient, which allows Dual City to get investments that others can't. Explain that to me. What's that mean? Let's dive in a little bit to that.
Sure. We have a sister brokerage company that we have I don't even know 15 brokers, and they go out and bird dog properties for us.
Okay.
But more so than that, we also have a lending arm in house, and we just launched an insurance brand. And going back to when I was in commercial sales, and we were looking to acquire assets. It was all right. We got an asset. Now let's call our our capital markets guy and ask him and email him and wait 2 days until we get a response, and maybe call somebody else. Having everything in house makes everything so much faster and so much easier. And then the same thing we realized for insurance. Like, I can't tell you how many deals like we get to closing day and be like, oh crap, we forgot to get insurance on this property. Let's scramble and get it done.
Yep.
And more recently, a couple months ago, we actually lost a deal that we were under contract with, and we were the money was about to go hard, and the 11th hour insurance came back. We couldn't get insurance on the property. And we're like, oh man, this sucks, because this was a great deal, and there were a couple issues with the insurance that we could have corrected had we had more time, but the seller was just like, no, it's going hard, or we're backing out.
Yeah.
So we had earnest money at risk. we had to back out. Had we had the insurance contact, in-house, we could have worked that out ahead of time and got that deal done.
Hmm.
So that's what I mean by being able to do, deals more efficiently and where others can't. Because I was in that, those shoes,
Yeah.
not too long ago too. So
Keith, did you buy existing businesses did you buy the lending business, or did you just build these all from the ground up?
we built the commercial brokerage from the ground up. We ended up partnering with capital and debt firm, and then we're building the insurance thing from the ground up. So,
Gotcha. And so you got these other companies that obviously are work really well with dual city investments, but are they also doing outside transactions? So
yeah,
yeah, it's not just
yeah,
in-house deals.
right. And Dual City also helps those brokers get deals done. Not only having a person to kind of quickly give an opinion on a price or an offering or be an in-house buyer, so to speak, but I don't want to get too technical on this because I could talk about this for hours. But our latest fund, our Dual City Advantage Fund, we do have a component in there where we can absorb people's assets tax deferred and issue them shares instead of a cash purchase, right? They don't pay taxes on that gain unless they cash out those shares.
Sure.
So they could trade their equity for cash flowing shares, which gives our brokers another tool to do more deals.
That's
so
really interesting.
So that's what I meant by like an ecosystem. We're helping them, they're helping us, and everybody's just doing more transactions because of it.
That's really cool. Wow. So how do you run all these multiple businesses? Because they're related, but they're different at the same time, and so you have to have things in place for these. So how do you like? I'm trying to wrap my head around this. Like, what are you doing to be able to run all these businesses successfully at the same time?
I have great partners. That's the short of it. If I had to do this myself, I want to be in business. I'm more of the golden retriever and chasing the new shiny ball, right? I'll go look at an idea, I'll vet the idea, and I'll bring it to my team. But the day-to-day stuff, I do have several partners that handle most of the operational stuff, and without them, I'd probably still only have a couple assets under control and be grinding it out every day. But we have a good team, and we complement one another. But so that's the short of it is good people around us.
You're the golden retriever. You're running around looking for the shiny object. What do you do? That can't be just true, right? It may be a little bit, but that's simplifying it, right? So what are some of your success habits or tips that you can give to our listeners? Things that you do, on a daily or weekly basis to make sure you're not just chasing the shiny objects, that you're actually providing good opportunity for your business to grow.
That's a great question. I've never been asked that question before. That is a great question. Right next to me, I have a daily schedule that I block out periods of time to do stuff, because if I didn't keep myself in have these bumpers. By the way, has another great book by, I got it right next to me, Nick Peterson. It's called Bumpers. Really short read. I think it's like 60 pages. It's basically keeping myself in these railways, right? So I'm not going all over the place. But it's also accountability to my partners too. I may come to our management meetings with 3 ideas, and they'll tell me 2 of them are just, they're too far out there, or it's we can't do that right now. So their account, I'm accountable to them. But more so just keeping myself on a schedule and a routine. If I don't have a routine, I probably have some sort of ADHD. But I need some bumpers to guide me through the day and through the week.
Yeah, definitely. Yeah, I mean, do you use a written calendar, or is it some
Yeah,
sort of app?
I do. Yeah, no, it's written right next to me.
Yeah.
I'm still
I do the
I'm
same
still
thing.
old school, stuck on the yellow legal pads and
Look,
whatnot.
I've got the the technology and stuff, and I've tried to do it, but I can't keep track of it. If it's sitting right in front of me on a piece of paper, I do it. If it's
Yeah,
on a computer, I lose it, and all of a sudden I'm looking at my email when I'm supposed to be looking at what's next on my calendar. I don't know if you're the same way.
absolutely. Yeah, can't really see here, but I have
Yep.
I've just moved into this new office, but waiting on my whiteboard behind me to be delivered. But the other two walls are whiteboards. So I'm a very visual person. It's got to be in front of me, and I put my goals up there. I put a 3-month goal, a year goal, 5-year goal, and every 6 months I'll look up and I'm like, oh wow, we did most of that. So I have to redo it. But yeah, between daily schedule and visualizing what we do and our goals and everything, I think those are great tips for anybody that is like me. It's kind of all over the place and wants to just learn and just do all different sorts of stuff.
Yeah, love it, love it. What's a mistake that you've made? Something that sticks out that you've made, and how can our listeners learn and grow from it?
Mistake I made. Well, I've made a bunch of mistakes. uh, well, in real estate particularly, starting out, we have made multiple mistakes upon mistakes, right? But we've been fortunate enough to be bailed out with the market thus far.
Yeah.
But I think as time has gone by, that's why we've gotten a little more conservative and a little more cautious, because we've been in some deals with some hair on it in 2016, and that the market's gone at a 45-degree angle since then. So those are mistakes, but you can't rely on the market to bail you out all the time, right?
Yep.
So I would say a great tip for that, specifically to real estate investment, is have multiple plans, have multiple strategies to exit something. Plan A rarely ever works, even on the good properties. So, we go in with our procedure of buying assets, and we like, all right, what's plan A, what's plan B, and what is the, oh shit plan? We gotta, bail on this quickly. Yep. So, we have multiple strategies. And that's also a strength of not having one particular niche, because there's so much to learn in real estate that can be, cross asset. We've learned stuff from retail that we've used on, multifamily and vice versa. So there's just so much to learn, and just being knowledgeable about all that stuff has helped us formulate those exit strategies.
Yeah. I think a lot of people are just like listening to this asking, how does Keith go from being this law enforcement guy to owning multiple businesses, running around, doing all these things, being successful at it? Like specific mindset or things that you do, the daily habits, what does it take?
Well, I listen to probably some sort of motivational video or recording every single morning while I'm working out. I'm grateful for what I have, and I look back at the distance that I've come, and I'm extremely grateful. Grateful for the people surrounding me who've helped me, got that far. Anyone who says that they're a self-made man, that's bullshit. There's always some sort of support or help that you've gotten from somewhere. So, I am grateful for that, but, I want to be better in every aspect, not just business, every single day, just be a little bit better, learn something new, whether it's your health, your fitness, or business, or just reading something different. I'm always striving to push myself to just be a little better. Don't have to be 100% in a year, but you know, if you get a 1% better every week, it's a pretty big gain, over time.
Right. Yeah. Just incremental change, incremental improvement. Don't focus on being the best today. Focus on being better every single day.
100%.
All right. So we're going to wrap up here pretty quick. I got a couple last questions I want to ask you before we do. What's a favorite? You've mentioned a couple books. You mentioned Bumpers. You mentioned Missed Ops that you wrote. What's another favorite book that you can recommend to our listeners?
Do I have it here? The Road Less Stupid is probably my stupid. Road Less Stupid. Have you ever read that?
I've not.
I don't have it here, and I don't remember the author's name off the top of my head. But
I think it's a pretty unique title that people could look up. And
yeah, look up that book. I think the author's name was Keith something, but that has got to be my favorite business book of all time. It's a common sense. Oh yeah, by Keith J. Cunningham. Very common sense focused approach of a business book. And most business books, you learn something in the first like 1 or 2 chapters, and the rest of it's all BS. This one I felt had content, from beginning to end. So that's one of my favorite books. And actually, another non-business book that I liked was Superhuman by Dave Asprey, and that's about health and longevity and how to live a healthier life. I thought that was a great read that I did recently.
Nice, love it. And look, I mean, entrepreneurs, I think I get caught up in it. We're also focused on these business books. We don't think about the health sometimes. And that's, what's the point of gaining it all if you're going to be unhealthy and unhappy?
Yeah, 100%. Without your health, you could be a billionaire and, you die when you're 40, but what was it all for?
What was it all for? Right. Love it. Well, Keith, last question. What are your 3 pillars of wealth creation?
Okay. I'm going to cheat and use what Dual City has as their core values. If that's okay.
Let's do it.
Because it could be applied to, your personal situation too. And that's protection, procedure, and performance. So protection of your current wealth, right? And this is what we pitch to investors too. Like, we want to protect your wealth first. We want to protect our assets. We want to protect your capital as our number one priority.
Yeah.
Procedure. You asked earlier, how can I be doing all these different things and successful in these different areas? I don't know, I'm not an expert in all these different fields or divisions or any of that. I don't claim to be, but what I do have is a procedure to get there, right? And if I have to hire an expert, that's part of that procedure. And then the last is performance, whether it's health, performing at a high level, or in business, just putting in the effort, and even in our, our returns, like, don't judge me for what I say I can do, judge me for what we've already done. So,
love it.
I hope that answered your questions.
Yeah.
Kind of cheated and turned it around to, personality versus our business. But
no, I love it. Those are great. Protection, procedure, performance. Fantastic. So last thing, Keith, how can our listeners get in touch with you, learn more about what you got going on and just, just be able to chat?
Well, like I said, we just started our marketing push. So, if you want to be our 4th or 5th subscriber on YouTube, you could type in Dual City Investments, but dualcityinvestments.com. There's our phone number up there, email, you could reach out through there. I think there's a contact form too. And all the social media links are on that website as well. So if you want to see what we're putting out there, we're in the belief of, I think in your camp too, of just putting the knowledge out there and not being so protective of the industry secrets and all that, and just trying to help other people get there.
Yep. There are no secrets. in this day and age. And so if you're going to try to keep things secret, somebody else is going to tell it.
100%.
I love it. All right, Keith, man, I really appreciate it. Appreciate the time. Appreciate the advice you've given us, the story about, I love talking with people that go from this, this W-2 like you with a federal law enforcement sitting in a car outside of this wealthy neighborhood and going, what the heck are we doing? And then just seeing the journey. So it's been a lot of fun to listen to your story, to hear your advice. So really appreciate it. I know my listeners got a lot from it. And you have a fantastic rest of the day.
I appreciate it, Todd. It was great talking to you too.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.